Just a few workshop items. So we're recording this live both here in the server, but also in YouTube as well. The only reason for that is because obviously there's a following on YouTube, but also it's live in the server. Now, there's going to be 4 of us. I'm just going to give a quick overview to the way the server's changed a little bit. There's actually 5 accomplished traders on the team, but at least 4 of us will be given weekly content in live sessions. We're all slightly different traders in our own right, which is exactly how we kind of, not cherry pick, but put this together. I'm probably more in line with the kind of smart money concepts. I like to understand market structure. I like to understand where liquidity is, supply and demand zones. A lot of that kind of stuff has always been where I kind of find myself most comfortable when it comes to trading. Then we also have Kik, who's actually who's in the audience there. He's very much algo driven. He has a lot of kind of knowledge on building indicators from scratch and using a lot of his own kind of ideas and techniques for how he likes to trade. I'm not going to talk too much about what he's doing because he's actually doing a live session on Tuesday. We also have MSol in the team as well. MSol is very much a TradFi kind of trader. He's very much likes to trade NASDAQ futures, CME. And again, if you're not familiar with that kind of stuff and you want to have more of that knowledge, he will be delivering his first content session, I believe, on Thursday. So that'll be a good session. And then we also have Dr. Gray, who is very much into TPO, footprint charts, order flow, a lot of that kind of stuff as well. So I think what I like about the way we've kind of structured this here is we've got 4 different individuals, all been trading probably since maybe even earlier than 2017 for most. I started trading when probably the last bull run, right, 2017. And so between the 4 of us, we've got quite a lot of content between us. Now, the first week, just because we wanted to kind of give this a bit of a launch opportunity, we're going to be doing all of our live sessions in the server for everyone. But if you like what you see and you want to learn more, because there's so much to pick up on trading, right? There's no single silver bullet. Let's just say that, you know, you learn a new thing and then everything's great. There's always something to learn. Then obviously maybe consider subscribing. I think the value is probably perfect. I don't think it's too expensive for what I think you'll be getting. So again, this is going to be a flavor of that week. And yeah, let's hope that you guys like what you see. So I'm going to be covering pretty much a basic introduction to market structure. And the reason I want to do that is because for me personally, I don't care if you trade Forex, I don't care if you trade crypto, I don't care if you trade indices, gold, whatever you trade. The most fundamental skill I think every trader needs to acquire is an understanding of market structure. And why is that important? Well, you know, there's a few things, right? Number one, you always want to confirm that market direction. You want to know which way that market's moving. And I think when you get a basic understanding and knowledge of the market structure, it's the first thing that gives you that kind of power. It's like a framework to work to, right? And then within that market structure, I always think it's important. You want to know where your swing range is. And when I talk about swing range, I'm talking about multiple swing ranges, right? Because there's a swing range pretty much on every time frame, whether it's a higher term time frame, a medium term time frame, or even a lower term time frame. And so what is them swing ranges between each individual time frame that you want to be able to trade within, right? Because some people may be swing traders, some may be day traders, some may be scalp traders. So it's important to understand where all of those kind of levels are within that market structure context. Typically, I split my market structure. We're going to be going into the charts in a quick second and going over this properly, but I like to keep things really clean, right? Because in the past, I was very, I used to make a lot of mistakes by not really recognizing the swing range. It was an important concept that I had to figure out, and that's simply because I might trade on the 15 minute, then I might skip to the hour, then I might go into 1 minute for trade execution. And if you can't create some form of objective structure in your mind, I think it'll be all over the place, right? And so the way I trade is I have 3 separate classifications, right? I have lower term time frame, which is anything from 1 minute up to 60 minutes. And then I classify medium term time frame at anything between 60 minutes and 24 hours or 1 day, right? So that's 1 day's charting. And then anything above 1 day, I'll classify as higher term time frame, right? And so when I'm talking about my swing ranges and market structure, it's always relative to those time structures. Anything between 1 minute and 60 minutes is lower time. Anything between an hour and 24 hours is medium term. and then anything above 60 minutes, anything above a day or 24 hours will be higher term time frame. So we're going to get into a lot of that. And then, of course, once you get your understanding of this, you then kind of understand, once you've figured out your swing range between any time frame, it's then about where's the premium and discount range. And then where the thing's key on to kind of get your mindset and focus into this is when you figured out your ranges. There's lots of ways to do this, but I like to use like the 200 EMA just to confirm, are we above the 200 EMA on this relative time frame or below it? Because that helps me understand whether the trend is bullish or bearish, right? And that's why we want to do it. And the last point I wanted to make, and I think this is probably one of the most fundamental, is for market structure. Of course, subjectivity is key, because it's the subjectivity piece that can be the decider between whether you make a good move or a bad move. However, with market structure, I think it's key to be as objective, at least as possible as you can be, so that you have a structured framework and a plan. So you have your rules that you work to in order to maintain, what that structure needs to look like. Because I think if you get too choppy and a bit changey and like, oh, well, maybe I'll do this or maybe I'll do that, it kind of starts to fall away a little bit. And if you're doing any kinds of extensive back testing or even forward testing, if you keep on changing that mentality on your rules, then your rules are out the window, right? You can't really do an effective back test. So we're going to go over all of that. So let's get stuck right in, okay? So starting off with basic understanding, right? Let me just shift this out the way. This is a typical. It would be lovely if it was like that. It's never like that, but just for the purpose of the illustration, this is just your very simple standard time frame, right? This could be 15 minutes, it could be an hour, it could be 4 hours, could be whatever we want it to be. For this exercise, we'll call it the lower term time frame, right? So this would be anything between 1 minute and 60 minutes, right? And so all I'm going to do, if you look at the way I structure these things, these are my favorites here, right? So I will have, what I'm always looking for is to confirm the trend. Do we get a break of structure? Do we get that structure that breaks that time frame? Because that's a key indication, right? It's always much more difficult to break structure, and the higher levels, the higher up the time frames go, the more difficult that becomes, because the amount of resistance, like on a daily resistance, that's much harder level to break than say a 15 minute or a 1 minute, right? So the higher up the time frames you go, the much more difficult that level is to break. And so you always have to put some significance around that break, right? And so nice and easy, we've got this structure here. What are we looking for? So prices come up and it's made this break here, right? And so the way I label this, and we'll get into some of the charts in a second. So if this was a 15 minute time frame, these are my templates, right? So I have a trend change up, a trend change down, which is effectively a break of structure or a change of character, right? So we'll talk about that in a second. Higher time frame up break, a higher time frame down break. And again, if you want to follow along with this as well, feel free to kind of do this along, but this is going to be a recorded session. So if you like what you see here and you want to follow along with this at a later date, don't worry, it'll be up on the server at some point. But this is going to be a lower time frame up break, right? And so all I'll do is I'll mark that as a lower term time frame up break. Okay, perfect, easy to follow so far. So then next I'm going to do that again. I'm going to rattle through this quite quickly because I don't want this to be too boring, so that won't go up there. Of course, trends don't go on forever, right? And so we fail to make a break of this high with this level here, and this is where we get that downward break, right? And so we'd call that, what I would call this, a lower term time frame TC, right, or trend change. So this is the first clue that on a higher term time frame, and I don't want to get too much wrapped up in this, but if this was like, let's say if this was the 15 minute, theoretically if this was the 4 hour, right, you can see that we're going to come down here, and that's just nothing more than a pullback, right? But on the 4 hour, I'll just change this to a different color so it's nice and obvious. Let's do, I don't know, do it orange, make it a bit thicker. Okay, but then we get that trend continuation there, right? So again, what happens now is on the 15 minute, we've broken the level, right? So what was at the start an uptrend, we've now come into a downward trend, okay? And so I would just mark that now as a lower term time frame downward break, okay? And I'll do the same again. And all I'm looking for each time is that, do we break the high here, or do we keep breaking the low? And I'll just keep marking that. And again, this will become a lot more sensible once we kind of apply it to the charts, okay? So that's it. But then of course what happens, that breaks down here, it comes back up, but then it fails to come and break down another move. In fact, what it does do is break the move up, right? And so then we get that lower term time frame trend change, which would be an up move. And again, by the way, if there's any questions or anything like that, feel free to reach out either on YouTube or Discord. Actually, let me just check. I've not got any questions. I think Kick's in the studio, in the audience as well, so he can come online if there are any questions. No, so far so good. Okay, so what we classify that as, we classify this as a lower term time frame trend change up break, and then nice and easy we get that continuation to the up. But on the 4 hour, so what we say is on a 4 hour, that's a medium term time frame, right? So let's just finish that one off. So on the 4 hour, what I would do is I would have this line here. So if you're just looking at the orange one now, right, we've mapped out our market structure on the 15 minute, nice and easy, it was clear. Now we're going to do that on the 4 hour, and you'd have that here, right? And that would be a medium term time frame up change. Sorry, it wouldn't be a trend change, it'd be a continuation, so it would just be an up. And that's pretty much as simple as that needs to be for now, right? That's the 4 hour there. That's the 15 minute within the 4 hour. Job done. The only thing that we need to map out at this level here is to just understand on each level where our, what would you call it? It'd be the premium and discount range, right? So obviously each time we come into this, the way we need to focus and the way we need to think about this when we're applying it to the charts is when, if I look at what would be my fib. So there's a low and there's a high there, right? If I apply that like that, I'll just change that to fair value. What we're always looking for really is a retracement on whatever time frame you're looking at. You expect the retracement to at least come into the fair value, right? That 50%, which is oftentimes called equilibrium. It's oftentimes called fair value, but it's the point at which there's a balance between buyers and sellers on a range, right? A traded range. And that the key to understand on that is, like, whenever price is moving up and you get a pullback, the reason there's a pullback on a trend or a continuation of the trend is simply because you're not going to buy when the price is high, right? You're expecting there to be a pullback. Now, usually what you tend to see is price will come back into somewhere between 0.5 to 70%. 618 actually is what's the kind of golden ratio, the golden pocket within a fib. But this whole range here, I think sometimes if you isolate yourself and lock yourself into like the golden pocket or that 618, you can sometimes miss out on good trades, right? And so definitely in a subsequent session, we're going to pick up and do some live sessions on supply and demand. So ultimately what we need to get to is when we're getting these pullbacks, because whenever we're trading, you want to trade with the trend, but equally you don't want to time it at the top. You're always waiting for that pullback on the trend, so then you can get back in for that next leg, right? And so the way in which we do that is we try to find the supply or demand zone within that pullback range, and then that's effectively where we're looking for that long or short, whatever it would be relative to that. So that's just a little bit on supply and demand. The other thing I just want to get across is the swing range, right? And so the swing range, I'll just use my highlighter tool. And so, for example, the swing is just going to be, let's just color out a different color really quickly. On a bullish move, I'll just color it green or something like that. You know, there's the swing point, swing high, swing low, swing high, swing low. But then we don't get a swing high, right? We actually get a breaker structure now. So then at this point, I'll just mark it. I'll mark it as the same color simply because we made a high, but we didn't make a higher high. The point at which it changed is when we got this break, right? So then I'd mark that as a different color. I'd mark that as where's the color? As a red. So then when I'm quickly eyeballing the charts, I can see at a glance again on the candles, and we'll go into the charts in a short while, just that where that point happened. So then that was the point there, which we want to mark as green, because that's that change. Okay, and then that continuation happens there. And so that's the key thing. The other thing that we'll get into in a second is we'll talk a little bit about liquidity and whether liquidity is a fair assessment. So if, like, within a swing range, but you get a spike, does that count as market structure change? What happens if it's just a wick? For me personally, wicks count, but I don't mark it as a high. I'll mark it as a liquidity, just because at some point it may come back and reverse into that, and others it might not. And so until we get the next break, sometimes you can't mark that out. So in general, this is kind of what we're going to be doing on the charts. The last point we just wanted to talk about really quickly was just to understand the relative strength, right? So whenever we're talking about market structure, specifically for things like a move to the upside, well then the lower area is the strong, right? And the upper area is the weak. So for example, where we've got this trend moving up, I would mark that there as a strong. So what are we on? We are on the, let's say it was the medium term time frame as an example. That would be the medium term strong level. So I would class that as a strong level that we expect to hold because the trend is up, right? We don't expect that to break. And I would have identified this as the weak level that I would expect to break. So just mark that there as weak. And for me, the way I trade this is I will continue to trade the trend until the strong breaks. The moment the strong breaks, well, then that's effectively a reversal of that trend, right? So you don't want to continue trending or trading the trend if you get a break of the strong. The only exception to that is if it's a liquidity grab, which again, you mark as a liquidity grab until such time that the next break occurs. And again, we'll show that in a second. So that's the kind of theory behind it all, right? It's just, this is a very easy to note and understand, but it will get a lot more complex when we look at the charts. So I'm just gonna get rid of this really quickly. Right, let's get down to task. Let's bring it back in line. So look, I'm gonna start off on a daily time frame, right? And the reason is because I want to map out three ranges. I want to map out my high term time frame, I want to map out my medium term time frame, and I want to map out my lower term time frame. I'm not going to map out everything because it will take just too long. I'm really only interested in the most recent swing, but for the sake of the daily, because it's quite easy, you can clearly see a nice trend on the daily, right? It's kind of like that. Yeah, so you're getting that momentum to the upside, which is just bullish trend, right? So the first thing I'm going to do is get rid of that, and I'm going to map that out as just my swing range. So I'm going to, because it's higher term time frame, I'm going to color this just white. You can color it whatever you want. We get a move here, 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 and easily you can just say, okay, well, right now we've got, let's put the magnet tool on. I'm just going to zoom in a little bit here. So the first break is we have this higher term move, right, which I've marked as a higher term time frame up, right, because we already made the initial break there. I'm just not going to go that far back. So we have a higher term time frame up move. Now look, you see this little wick here? The way I think about that is, okay, theoretically, I would mark that. I'll show you this because I think it's an interesting point. So does that actually break that? Let me just check. Yeah, that's the point there. That originally on the daily time frame, you would have marked as a liquidity because yes, it came up, but then price came back down. So that one I would have marked as just three little X's. That just shows me, yes, it was a break, but it pulled back. But for me, the pullback, you know, that's the range, right? So if I put that fair value range on, which would say here to here, right? Where does it pull back to? It pulls back just over 50%, right? It pulls back into that zone. So even though it's pulling back, the way I'm thinking about this in my mind is, yes, it's pulling back, but it could pull all the way back to here, because this is the strong low, right? This level here is the strong low, because you've seen that move to the upside. Price is pulling back, and then it's gone for its next leg. So whenever you're looking at market structure, that's the kind of confidence you should be thinking about. Okay, yes, it's a pullback, but how far does it pull back? Is it coming back into a premium range or a discount range for buyers to get back in and have another go? That's effectively the way you think about it. And so onto this move here, because it eventually did break. Even to that point there, by the way, that was still a liquidity grab, right? But then, of course, 2 days later, that price does break. So effectively, that whole range then is that higher term time frame up move break. So what's the next level? So then we come up to here, and then we break again from here. So that would have been marked as a liquidity initially. So if this was live and during the live session, I would mark that as liquidity, because I don't know at this stage how far that's going to go. So where's the swing range? So that's the swing range there, right? We just come into 50%, roughly 50%. So like the moment that 50% comes into play, at any time in my mind, it's like, okay, buyers should start stepping in now. Once we've had enough of a sell-off from the recent high, which was here, to start thinking to myself, right, okay, premium discount time. So any point now, and clearly it's exactly what happens, right? The money comes back into the market once it hits that 50% range for that pullback. So that would have been a liquidity grab initially, but because it stays in that range, of course, what happens is it hits there, and that's where you get that candle. So all of these are effectively going to be liquidity, but we eventually break it with this candle. So again, that's my next higher term time frame up move. Then what happens? So then we have a new swing. So the new swing range. So we pull back here, and then we come up here, up to here. Now you can see on this one, actually, we had a huge pullback. So that was the high. Look where we come back to. We came back to the most the most aggressive discount it possibly can, without breaking, right? So that's that level just held really well, right? But each time that's a strong level, right? Because, you know, we've confirmed within an upward trend, we're expecting a pullback. Of course, we get the pullback, comes right down into the discount zone, right down to as far down as the same level as here. If it didn't break, I mean, I don't know, I can't remember actually if it break. I was trading on what was I trading on? It wasn't on Binance or MEXC. I was actually trading on a cap on a funded challenge. So I think on the funded challenge, this did actually break, but that would have been marked as just a liquidity. But in this instance, it didn't break at all, right? So move still bullish, right? Still continuation of that move to the upside. So there's our swing range. So now again, we get that next break there, and there's that break. We have a new higher term time frame up, which is fine. So now here's our range, right? From here all the way to here. Now this is not to say that price can't continue to go higher, because we don't know yet at this stage if the pullback is happening or if price is going to continue to the upside. But whatever this range needs to be, yeah, since we made this break, you can almost guarantee at some point you're going to get a level. But because we came down here, what you normally do is, and this will be a lot more clearer when we get into the medium term time frame and the lower term time frame, is you take the lowest point between the range as your range. So the lowest point actually was here, right? That's that lowest point between the range, and so that's now our range that we're trading in. So effectively, if we pull back, you know, anytime it pulls back below that 30,300, 400, for me is where the potential to go back long again is. However, you know, not for this session, but we certainly will cover supply and demand zones at a much deeper level on other subsequent sessions. So that becomes as simple as it needs to be, right? I'm going to, at least on the higher term time frame. So all I'm going to do now is simply mark what my higher term time frame range, which is going to be like this and like this. And then I'll just mark that higher term time frame week, because I expect the week to break. And this is strong, right? Because we don't expect the strong to break. And you know, you can see here, if you traded, if you were a swing trader trading this, you know, each time it's you know, right from, I don't know, 16,000 whatever all the way up to its height here, which is 35,000, right? So just trading that range, because the power in the higher term time frame has just shown each time the pullback somewhere in that somewhere slightly beyond that 50% range. Each time it's come in, it's diverted back and then, you know, gone on for another leg. So how long will this happen and last? Who knows? You know what I mean? Eventually all trends do go. So, you know, you've always got to take everything with a pinch of salt. There's no silver bullet to this. This is just mapping your ranges, right, and understanding your swing point. So that's what we're going to do for now. Now, here's the next bit. This is a really important thing that I think is good to know, right? And it's some people use it, some people don't. I like to use it because I don't want my charts to be too cluttered. So from now, if I go into here, so we've got swing points as the highlighters, and we've got the market structure as the trend lines, right? So I'm just going to go trend line, get rid of that a second, and then I'm just going to go create a group of drawings, right click, rename HTF market structure. Nice and easy. Get that one down. I'm going to lock that because I don't want that to mess me up. And I'm going to highlight them. I'm going to create another group, and I'm going to call this rename HTF swing points. Perfect. And now obviously I can just have them shown or hidden. But what I do here now is, once you've got your folder structure, I only want to show this, right, on whatever the relative time frame is. Now remember, my time frames are 1 minute to 60 minutes is lower term time frame, 1 hour up to 24 hours is medium term, and anything beyond 1 day is higher term. So this is the higher term, right? So I only want to show the visibility of this on the charts relative to whatever time frame I'm in. So if I'm over a day, then I'll show that. So the way in which we do that, if I go into settings and go into visibility, this is basically saying what time frame do you want to see whatever you're mapping out here. Now, I don't want to see it on the second. I certainly don't want to see it on the minutes, and I don't want to see it on the hours. The only time I want to see this is on the daily, right? So anything from day 2 and above. Is it day 2 and above? Yeah, because anything up to a day will be medium term time frame, right? So that should be fine. And then I'm going to do the same. Actually, no, I do need to have that on the day. So let me just change that again. Settings, visibility. I'll change that to 1. Perfect. Okay. And then I'll do the same again. Settings, visibility. Get rid of hours. Okay. Now, if I go to 12 hour now, these all should disappear. And they do, and that's because we only want to see this on the daily time frame, right? We don't want to see this on anything below that, because what you don't want to do is have lots of silly dots and lots of lines all over the chart that are meaningless to you, right? Because it just gets a little bit too noisy and too confusing. So that's predominantly why we want to do it. Now the next thing we want to just do is go into I'll do it on the 4 hour, right? But it's all relative. Let's start our mark. We want to kind of start it relatively tight, right? So I'm going to start it from here. So what's our swing range here? So we'll just say we've got market structure there, which we'll start it with, and I will say that is medium term time frame up. Okay, and that's our first swing point. If I can do that there, it's just there. Change that to a different color. Okay, I'm gonna the way I do mine is I'll do that a different color. I'll do it green. Actually, I'll normally do it a bit more like that. Let's just do that color, right? Just checking on that. Any quick questions? No, everyone's flying. Is the daily trading using leverage? Don't really understand many of the terms. It's just market structure can be used on daily spot. Yeah, that's it. Yeah, if you're watching on YouTube, it's just the time frames are nothing to do with leverage or anything like that. It's purely to do with what you're trading and what time frame you're looking at. So what's the swing range here? I'm just gonna map this out there, and then we have this wick, right? So would I classify? I wouldn't put that as the swing range because we didn't close, right? Yes, it broke market structure, which is why I've got this here, but I'm not going to map that as the swing range just yet until such time that, because let me just explain this a little bit, because I don't want this to get confusing, because it can be if you don't know what I'm talking about here. But basically, yes, we have that huge pin bar to the upside, and I think if I'm honest, I think that was the initial ETF bullshit that came out from some publication, I think it was, which wasn't great, was it? And then BlackRock came out and said, no, it's bullshit. So I think that was what that was. But usually there's no smoke without fire. A few days later, yada, yada, yada. But I would normally mark that, right, as a liquidity. Because if price was to do this, come back down and then start doing that, well, yes, it was a valid sweep, but it wasn't it didn't change the market structure, right? So I would still identify that, because for me, my argument is, okay, we've cleared all of that liquidity. Whatever liquidity is being built up above here is all being cleared with this move. And so whatever levels were strong enough to hold clearly weren't strong enough, right? Because the bullish behavior was enough to break that through. So it's still an important thing that's broke, and usually clears the path for further momentum to the upside. So it's always like, okay, we've had a liquidity grab, a run on money, and now the order book's being cleared. So the path is a lot less resistant now, because all of the orders that had built up that were short and have now been, blasted out and liquidated. So a lot of the time when you do see a liquidity grab, it's like at the first punch at the door, right? Eventually it will break down. So even though it is, I'm still going to classify that as a nice market structure break. So we get that next dot there, and then we do get a nice clear break of structure again, right? So that just happens to be here. Now, this was the low. This was the lowest point between these 2 points here, right? So that was no longer a liquidity grab. In fact, that was just a medium-term time frame upward move. But this is the lowest point between the points. So between the previous swing high and the new break point, what was the lowest point? So that's our swing low. So from a level perspective, this would have been our low level, right? There. That would have been our strong low. So we'd mark that as a strong low on the medium-term time frame. I wish they'd just not organize this in this way. It should be H, then M, then L, but it does it alphabetically, which is a pain in the ass. Medium-term time frame, strong, right? So I would mark that as a strong level that I wouldn't expect to break. But what happens? Price comes up, we get that 50% retracement or more, and then price comes up again. So then we get that as a nice medium-term time frame, break up there. So what we do then is say, okay, well, where's the low point between this and the break? Well, the lowest point there is here, right? So then that would be our new low there. Sorry, that wasn't perfect. Just try that again, sorry guys. That would be there, that's the low. So then what we do is that then becomes our new strong low, right? But we get that huge move that breaks. So of course that becomes our high. But we classify that as a weak high because we expect for that to break, right? Because market structure is bullish, right? And that's the whole key and concept. So that would be medium-term time frame. Sorry, that wouldn't be. That would be a medium-term time frame strong at weak level. So there's our current 4 hour or medium term time frame. So whether I'm looking at the 3 hour, the 4 hour, the 12 hour, whatever it is, that's that medium term time frame. Now we just do the same thing again, right? Nice and easy. You know, for me, what this kind of means, the way I think about this now is, okay, well, now we have a trading range, and within this trading range, price can do absolutely anything at once. It will build liquidity, it will come into a zone, it will go out of a zone. I just know, for me personally, looking at this, it's like, okay, well, there's our structure, right? There's our discounted levels. So where do we expect at least price to come back into before, by the way, it breaks to a new level? Well, you would absolutely anticipate, and it's not a wrong thing to think that price should come into these zones before making a new high, because what happens every time you blast through liquidity here, obviously that's not always the healthiest thing for market makers, right, and liquidity providers, because they have to provide that liquidity, because of course fantastic news has just come out, right? BlackRock's gonna, you know, create a spot ETF for BTC. Okay, the obvious conjecture is that people want to buy. No one wants to sell when news like that comes out. But if the market makers can't provide the opposing order for that, then you haven't got a market, right? So they have to provide that. So you can almost guarantee that price has got to come back into these levels to build liquidity, build all your patterns, build your pennants, whatever they are, just because it's the nature of the markets, right? So we've got a nice confirmed trend, right? We know where the swing points are. Here's our current swing high on our medium term. Here's our swing low. And yes, it is a rather large range, but the range is, you know, it doesn't matter what the range is. The range can be small, the range can be large. It doesn't really matter. So again, we want to apply that same narrative, right? So highlights there, we just want to mark all the highlighters here as a new folder. Create a new group of drawings. These are just medium-term time frame swing points, and then we have. Sorry, we want to also put that in there. And we have the trend lines, which we're going to mark as medium-term time frame market structure. Okay, so we're getting some clarity now, right? We have a higher term time frame, and we also have our medium term time frame mapped. Now we want to do that same thing again. So visibility. So now, right, we want to show this at anything from an hour up to 24 hours, but we don't want to show it on a daily. All right, so that's it pretty much. Anything between 1 hour and 24 hours. Remember, 1 minute to 60 minutes, fine. We can show that on lower term time frame. Anything between an hour and 24, we want to show that as high, as medium, and anything above 24 hours, we want to show as higher term time frames. That's fine. Do the same again. Visibility. Let's get rid of the months, days, weeks, days, minutes, seconds. You just want the hours. And so to prove that, if we now go to the 15-minute, I want that to go out, which it does, right? And you can see when you do this in the object tree, it does this. It changes this color to orange to let you know that there's some sort of automation going on there. So just to kind of zoom out a little bit, I can go now to my daily, and you'll see now that my daily has the nice data on there, and I can go into the 4 hour, and you can see it changes relative to that visibility of what that is. Now, incidentally here, the medium term time frame and the higher term time frame, the daily, is both the same levels, and that's simply because we had such a bullish move, right? So that's a fair point to raise, and you're going to see that it's not always going to be as clear cut as that, because sometimes you can get the 4 hour where it'll be in a really small range, right? But it hasn't broken a daily level, so you can get different levels. So what are we up to now? So we've done that. Now we want to go into the lower term time frame, so sub 1 hour, right? I'm just gonna do a very quick check to see if I've got anyone's asked any questions. No, looking good here so far. Let me just nip to YouTube. No, everyone's good there. Cool. Okay. So lastly, just gonna quickly go over the 15-minute, and then we should be good to wrap it up and get some. If there's any Q&A, maybe talk about a little bit about that. So, okay, let's do the 15-minute. I say 15-minute, it could be any time frame, right? So, you know, we don't want to dwell on doing too many of these, because it'll just it's non-relative. Once you've got your swing range, it's your swing range, right? But this is where it gets a little bit more easier to read, because we can start our swing range nicely here, right at that low there. So that'll be the start of our low. We will have the range here. I'm going to put that magnitude on really quickly, and that would be a lower term time frame strong. LTF, where am I? Strong. Okay, that's marked there. So where's our high point? It's here, right? The only thing I'd say about that is we didn't come down to take any liquidity really, you know, from this move. So I would probably say that that move was one long move. We did take liquidity here because you can clearly see the candles are really starting to drop lower and lower. So it wasn't quite the 50% for sure. Doesn't have to be, you know, it's like it's not written in stone that it has to be. But you know, anyone who's usually buying there, you would probably anticipate that wouldn't be value. But clearly it was, right, because prices continue to move up, but it doesn't always have to come down at that 50%. Okay, so there's our swing high, there's our low, of course there's our nice structure. So all we're going to do is map that there and just change that to lower term time frame up. We would have incidentally got a trend change here, so just so you're aware. I didn't go this far back, but just for clarity, that would have been a TC up, right? Because price was moving down, so we broke. Well, we didn't quite break that, so maybe it wasn't. We kind of was just ranging for that period, weren't we, really? So I won't bother marking that, but I'd probably say that when we broke this high here, because price was moving up, but then we broke down. So you'd have had at this level here, you know, some small kind of, that would have been a liquidity grab, but that broke it. So that would have been a lower term time frame trend change. And we got another low there, which was actually just a liquidity, yeah. So because we didn't come back and break that range. So I would have marked this as just a run on liquidity. So either triple X, and then of course we came back up here and we got that trend change there, right? So that was that up lower term time frame trend change, and we got our confirmed trend change. So now we know we're in a trend, because how does it work, right? The first thing you've got to get is a TC, or a change of character as it's known for most. But a trend change, whether it's a lower term time frame move up or a lower term time frame move down, your first is you've got to get that trend change. That's got to be the first one, right? Second one is just the upward move. That's confirming the break of structure, and then each time we can just keep on mapping these out, right? Another nice move there. So another move here, 15-minute. But you know, I'd probably argue that's one move, right? So I'd probably say that is the move there that I would use, because it's just, there was no real run on liquidity to the downside. It's just move up. This is just inside candles from this candle here, right? So there's no liquidity's been taken. So it's just one move up, as I would kind of qualify that. Yes, we've got to move down here, but there's our swing range there. How deep did we go? So if that's the swing point here, there's the high was there, right? So you want to say the range just shy of the 50%. Sometimes you can get front run, right, where people know where the price is going to start getting a little bit more tasty and just get in there quick, because they want to get that move before everyone else. And then you get that last one there, right? That's that nice move there. Lower term time frame up move. So where's our swing point? There's our swing high. There is our swing low here. So let's bring that up here. Obviously, at the moment, we're going back in time, but when you're doing this live, it's so much easier to do, because you just map. It's just easy to map out, right? You can just see where's your current range, you know, which is here. That's our week. So lower term time frame. Let me just check that. That's the strong. That's the lower term time frame week, yeah. So that's our range, right? So, you prices being aggressively moving up, but you've got to remember it's not always going to happen. And like I said at the beginning of this session as well, always, like, the higher the time frame, the harder it is to break the level, just because of the amount of resistance or support would be at them specific levels. 15-minute is obviously going to be a lot less. You'll probably see the strongs getting broken a lot more often than you would on, say, the medium-term time frames, and then even more still the higher-term time frames. So like I said, when you're trading this, always be mindful of the fact that, yes, the trend is obviously there and that's great, but always respect the fact that there's always a higher-term time frame or medium-term time frame that is nothing more than a pullback. So, for example, on a medium-term time frame, if you look at that, that's kind of in a range at the moment, right? But on these are all 15 minutes, but on the 4 hour, it's a pullback, right? Price moves up, pulls back, price moves up, pulls back, price moves right away up and pulls back. But on the 15-minute or the lower term time frame, it's actually a trend change, because trend breaks and then goes back up again. So, like I say, it's important that we're aware of that fundamental note. So, lastly, again, just to map, where are we? So we've already come into that 50%, right? So, anything's kind of in this zone here is nice, right, to get into, to start thinking about long. So if you scale into your trades or whatever else, just knowing that this region is an interesting region to be thinking about in terms of that, price being a discount for people getting into the buys. And so lastly, just to round this one off, so we've got our structure nicely mapped. What are we going to do? We're just going to make sure we've got our visibility locked and loaded. So we're just going to go into the trend line, trend. There, just going to create a group, rename, lower term time frame, market structure. Beautiful. Okay, and then we're just going to go select that. We're going to call that lower term time frame swing points. Okay. I'm going to lock them in so we don't mess our charts up. Don't need the fib, I can delete that. So remember, what are we expecting? We're expecting the weak to break and the strong to hold, right? Let's just change the visibility real quick. Settings, visibility. Now, what are we saying here? This is anything up to between 1 minute and 59 minutes, yeah? This one, visibility, anything between 1 minute and 59 minutes. Perfect. So now, it's took us 45 minutes to do, but within that 45 minutes, what we've actually managed to do is create our swings and our ranges on all of these time frames. So we've got a relative sense on what's going on. So, 1 minute, doesn't matter what range I'm on. If I'm looking at the 1 minute or the 30 minutes or the 45 minutes up to an hour, I'm going to see that range. The moment we flip to an hour, I think actually, you know what we need to do? This is what caught us out last time, right? Just go back into here real quick. Oh no, sorry, that's right. 1 hour is the medium term time frame. Let me just scoot that out a little bit. So there's our medium term range. So, for us as traders, whether we're on the 45 minute and the lower term, where you're just quite easily seeing where that range is, or you're going into, anything above, you can see where your higher levels are. So just knowing that each time, and as we zoom out again, we've got our ranges and our swings mapped, so we know pretty much where we are relative at any point to a strong or a weak level on any time frame. So I think that's pretty much it. The only thing I just wanted to quickly dwell on very quickly is just seeing the relative EMA, right? So let me see, we've got an EMA. No, not right now. Indicators, EMA. Let's have a new exponential moving average. Let's just look at, map this out. What are we on the nines? We want the 200. EMA. And so what are we using this for? So on all levels, what we're trying to understand is, yes, we have the range, right? And it might be bullish, it might be bearish, but the thing that we're trying to identify is if we're above that 200 EMA and the swing range is bullish and the trend is bullish, we shouldn't really be thinking about going bearish, right? Until such time that we start to show signs of weakness, you know, where we start to break the strength. And if that is the case, then that's okay. Where are we relative to that 200 EMA? So if we're below that, then that's okay. Maybe the trend is starting to change each time. So I always want to see that. On the 1 hour, again, well above that 200 EMA. 2 hour, 4 hour. Yeah, absolutely well above it. Daily, smashed through it, didn't we, when we had the kind of news. Yeah, so all in all, as I say, you know, what we're doing with the server is we're really trying to change the dynamics. We want to provide lots and lots of live content. Whether you are someone who's pretty much a seasoned trader, or whether you're new to the game and you want to start learning more, each time we're going to try and build on these concepts. We're going to pick up a lot more different styles and different trends and habits about how people trade, different styles about, you know, whether it's a specific type of indicator or a strategy that people like to use. We're going to be covering that, at least 4 topics every single week, each one roughly ranging about an hour, somewhere between 45 minutes and an hour. And then also I myself will be trading with the Apex Trades companion indicator and range ruler, which was made by our very own Kick, all on altcoins. So I'm going to probably be trading maybe once or twice a week live, specifically for our VIPs, just to go over some of that, because I think it's really good to again, I'm not going to spoil all of that. We've got all of that good stuff to come with Kick and whatnot. So I'll just quickly check. There's no quick questions before we adjourn on this one. Don't think there's been any questions. Some questions in the YouTube, but I think I've answered. So that being said, I think we'll leave this one there, and just thanks everyone for tuning in. Speak soon.